Ladies and gentlemen, Kim, you're welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.13%. Dire on the S&P 0.4%. Semiconductor 1.4%. Dow, Russell 2000. Biotech, healthcare, retail, emerging market. These guys are green today. Transport, banks, energy, home builders, utilities are green, red. Bitcoin up, gold, silver, miners are down, dollar down, oil down, treasury bond up. VIX is down about 4%. There, let's do this. If you haven't already yet, Spider! So you're currently looking at daily chart on your screen here. So giving you guys a special update for this weekend. We're going to look at daily chart, not 65 minutes. So we're going to look at a little bit of much of a bigger picture, kind of understand what's been going on this year's price action, as you can see on your screen. As you can see, this is where we topped out here at 478 or so on Spider back in January 3rd. So starting 2022, that's when market topped, just very first trading day of January of this year. And you can see since that peak here, market came down 15%. 15% in about a few months or so. And that's usually, 15% decline is a significant decline in a normal bull market circumstances. And you can see market did see a little bit of bounce here, and then market came down again. So another 20% decline during, as you can see right here, in early April to about mid-June. So about 2 months, this market, the S&P 500 ETF here, the S&P 500 here, suffered another 20% decline. The market made a move here for another month or so, and then tanked yet again. And this time, this peaked out in September, October, August, mid-August here, into mid-October. So 2 months, another 2 months of decline, losing another 20%. So as you can see here, we lost 15% in January through March. And then from April to June, we lost 20%. And from August to October, we lost another 20%. It's probably one of the most brutal price action we've seen since 2009 financial crisis, because we have not seen anything like this in a while. And that's why this year's price action really made a lot of even the long-term investors really nervous and anxious and doubting that this market could ever recover from this kind of price. And first of all, I want to talk about the fact that we are dealing with this falling resistance here. As you can see right there, that purple dotted line, that line right there has been the kryptonite for the buyers. As you can see, just like a clockwork, every single time we hit that level, this market completely tanked. And you can see it happen here, tanked here, and we're right at this level. And right now, these days, so many people are looking at, there's so many free charting softwares, and you can always look at these levels. So this is a level where everybody's looking at, right? Everybody can see that we have this resistance area that everybody can see. This is what I call, this is a pretty prominent level, right? So this is the level where that, people are trying to figure out that, are we gonna see another 20% decline, which will get us to about, as you can see here, they'll get us to about 320. If we see another 20% decline with these lower highs and lower lows in this vicinity, this market will get to 320. So we're dealing with very important level. This level right here is imperative that we understand how this market is going to behave in this vicinity, because it's going to determine how this market is going to perform for the month of December and even going into January. Remember these declines right here? These are about 3 months declines right here. So we're talking December and January. So understanding what this market might do in this vicinity is very, very important. How you're going to play this market in the next 2 months. So for sure, we know that we have falling resistance, right? What we don't know, what nobody knows for sure, is that are we gonna see another decline in this vicinity? Are we gonna see another 20% plunge? Or is this the time where this market is actually gonna break out and break above this falling resistance, for the first time this year, and possibly getting up to about 430 on Spider here? That's going to be the very, very important swing. Okay, so a lot of people are thinking and believing that this might be that, that bear market rallies along the way. And that could be the true. That could be true. That might be the case. So how to determine this is understanding the big picture. And then there's that daily, right? Looks to be very, very vulnerable here in this vicinity. And then you also have to understand the bigger time frame, the weekly, the monthly, the quarterly, and the yearly, yes? And then you have to come up with a higher probability scenario, understanding the secular trend of things. So it's not just as simple as matter of just like, hey, look at that. There's a resistance here. Yeah, for sure. That thing's going to go to another 20%. And I'm going to bet my farm and I'm going to short the hell out of this market. Keep in mind, same people who thought that 2012, 2015, 16, 2019, 2018, don't forget about 2020. So many people, because I've been trading in all of those declines. And so many people, people thought that was it. There's no way this market can ever recover. I mean, 2015, 16, the individual investor sentiment was so bearish. What about 2019? What about 2020? I mean, 2020, everybody thought that this would be the Great Depression. It's going to take 10 years to get back to new all-time highs. What happened in 2020? It took 4 months to get to new all-time highs. So don't ever discount the fact that this market is able to do the unthinkable. Yes? So we can't just look at one data and say that's it. Yeah, there you go. That resistance right there. That where the market is. This market is so complex, right? There's such a intricacies in this market, and the biggest thing about this market is that this market is going to fool the majority. It's been doing that since 2009. It always fools the majority. So you cannot think like everybody else. Just because some YouTuber with the millions of followers come out, this person who has never, ever truly understood how to invest in this market, he's just going to talk about the market because as soon as he talks about the market crashes here, he's going to get millions of views, right? As long as you follow the herd, this market has a way to slaughter those who doesn't understand the secular trend of things. When I actually go to Dow, right? So this is what I see. So usually, I mean, if you actually go back to, 2008, because a lot of people have been comparing today's process in 2008, usually when the bear market rallies actually happen, what you find is that you see, a lot of these indices, they all kind of start to fall down and they start to not able to reclaim certain levels. What's the definition of a downtrend, right? What's the definition of downtrend? Lower highs and lower lows. We're looking at Dow Jones Industrial Average here on the daily chart. As you can see, for the first time since this entire year, we got that higher high, what it seemed like, right? That falling resistance has been broken for the first time, and Dow is actually only about 6% away from the all-time high level, right? So Dow's actually leading the entire market. S&P 500 sandwich in between. Nasdaq is the biggest lagger. However, in 2020 and 2021, it was opposite, right? It was the Nasdaq that led the market. Spider always sandwiched in between, and Dow lagged. So it's like maybe it's the market's kind of in its way to kind of balance things out a little bit. Back here, Roka. This is a 2008, as you see on your screen. Just if I just go to here, and then as you can see right there that lower highs never truly gets reclaimed. You got the lower highs here. Market did see that bounce, but you don't see this market actually getting up and reclaiming some of these levels, right? You see that falling resistance here. And not only that, I want you to pay attention to that, my long-term and primary term moving. That's my long-term moving average, and this is my primary term moving average. As the market gets back up, what happened right there? So you see how that falling resistance and both of my long-term and the primary term moving average, they're all colliding in that vicinity. What does that mean? That means we have a triple resistances on that vicinity. So what the buyers needed to do, they need to get above it and then get above these swing highs right here and then start covering higher lows and higher highs. But they failed to do that on the Dow, even with the lower highs. And this market truly saw real bear market. I mean, you really saw the bears showing their teeth. And this all happened in that vicinity. Right now, though, a bit different scenario here. You can see that here. You see that falling resistance here? That falling resistance, yes, that falling resistance was there. And my long-term and my primary term moving averages were there, and that was similar to what we saw in 2008. Yes or no? Yes. Instead of this thing coming down and then just crashing it down like it happened in 2008, what happened was we actually saw a bounce, and we got above my primary term and my long-term moving average. It has gone above that falling resistance, and we took out this swing high here. And you might ask, why did that happen? Well, you're gonna have to watch my long-term analysis where I go over that weekly bullish divergence. That happened, and because of it, we saw the industrial average nullifying that potential crash scenario. So going back to Spider, it is not too late to sign up for Traders Club membership for Cyber Week Black Friday deal still going on until this Sunday evening. If you've been thinking about joining Traders Club, I have 50% off for investor annual plan right here. Investor annual, 50% off, and 40% for quarterly for investors. Everything else will be 30% other members. Everybody, a lot of people ask me about the moving averages, the oscillators, what kind of oscillator I use, what are the settings, what the configurations are, what are the moving averages. All of that information is available to you as a member for any tier, but I promise you that's going to be very small benefit of what you could potentially receive with the Traders Club membership. Take advantage of this. Again, Sunday evening, this Cyber Week Black Friday deal will end this Sunday evening. Going back to Spider, same thing here. So let me get rid of all of this. So you can see, just like 2008, right? There is the falling resistance here. Yes. And my long-term and my primary term moving average colliding here. market tanked, got back up, right? But why we got back up? Because we had that bullish divergence. Remember we talked about that. And we're just now right on this level. So as you can see here, this is a level where if we see S&P following the lead of the Dow, and if this thing gets above the falling resistance, and if it can get above 430 or so on Spider, this swing high, and again, Dow is already there. If we can get there, that will be that first signal that this market nullified and negated the potential possible scenario of 2008 like bear market scenario, and this market is possibly preparing to resume with this primary term uptrend because it was in intermediate term downtrend, but in a secular term, we're in a secular macro uptrend.